get more on what happened out there. Nick Twidale is joining us from FP Markets. Nick, it's been a volatile week.
It certainly has, isn't it? And not an expected one, I think, at the start of the week. If you ask most people, we probably thought we'd see it sliding around on a little bit of thinner liquidity, but not quite as much as we've seen.
Okay, so walk us through it. Now, you've got us a chart of the Japanese yen, an hourly chart. So what can we take from this?
It was, it was quite dramatic, wasn't it?
Yeah.
Like speaking to a lot of guys in the market, I think one word that came out, they were sort of incandescent when the BOJ went with this and ruined their plans for Christmas parties this week. But like it came off that resistance trend line. You see it was trading just there, like sort of in the 137s, and it just smashed through hundreds of points. Liquidity was very, very difficult to find during this move as well. And as expected, it just sort of like, you couldn't call where it was going to stop, but 130 was a nice psych level that's going to put a line in the sand, I think, for a short term. We've had a nice little bounce overnight as well, and we're back to around these sort of 132 levels. I know a lot of people, especially over in Tokyo, are thinking these levels aren't a bad sort of level to get back in. 132.50 was the first level that I'd heard sort of out on the street. But when you look at charts like this, it is very difficult to find decent technical levels now, because we're in the middle of the range and we're in the middle of this Christmas period. So it is going to be a whippy market for the next couple of weeks, I think. Okay,
so how's this all played out for the Aussie dollar, the good old Aussie?
So the local battler's going. It's gone okay, hasn't it, over the last couple of months? There's a lot of options interest out there as well, and until we get something that's really going to spike it one way or the other, I think we're going to see a little bit of range trading for the next couple of weeks, and that's probably going to be true of most of the majors. Interesting move for the Aussie, and I didn't throw that chart in, but it has had a really decent rally against our cross-Tasman neighbours, the Aussie Kiwi. Yeah. I didn't throw that in there, but it's had a nice little bounce off of the back of really probably a little bit of I suppose better sentiment out of China. And if you see that, that's had a nice move. So I think we're going to see obey the ranges for the next week or two. But Aussie capped out nicely on that moving average. I think anywhere up there, you're probably looking to sell rallies at the moment until we get a firm start into 2023.
What are we looking at here? This is the hourly.
This is the hourly. So I think what you're looking at is there's a little bit of strike pollution around 67, the figure. When you see that sort of chart pattern for the last few days where it's not really breaking out that range, anywhere 20, 30 points away from that big figure, you're going to find sellers and buyers. So they're just playing those strikes at 67. I think there's a decent amount of strike size there. And we're going to need a real fresh catalyst to take us out of that range over the short term.
Okay, so let's get to the pound. What are we expecting to, walk us through this chart here.
So this is the longer term chart, and I think we just threw this in. Once again, we're seeing sort of range bound moves in the pound and the cable especially, but we threw this one in just because end of the year, sterling's probably taken away what we've seen in the yen. Sterling's probably been our other favourite in the majors for volatility.
Yeah, it's been quite the year, hasn't it?
Well, it has indeed. So I think it's for some traders over there, especially in London, they're pretty happy to see us in these choppy ranges. But I think from here you can see it's really been behaving very nicely. And when you get these bigger moves that we've seen, those moving averages do have a little bit more impetus than maybe they have in other trading conditions. So I think for the moment you can play the ranges we've got. We've got like 120 to the downside and coming in around about 123. That will probably do us for the next few days into Christmas. But you might see some nasty moves post-Christmas when there's thinner liquidity out there. But in general, I don't think until we start to see fresh news out of central banks, and any M&A stuff can take us out of ranges as well. But I think we're going to go okay up until sort of the first week of January, and then we might start to see the fresh fundamentals kicking in.
Okay, what about the euro? I mean, are we just marking time to the end of the year now?
I think we are, yeah. 106 has been doing it. A similar pattern to what we saw in the cable there. I left that line in. That was a big former resistance that we broke through. We haven't had a massive...
You're talking about the top red line.
That top red line, yeah. We haven't had a massive break through the top. It was decent. It got like a big figure and a bit. Yeah. And now we're sitting around 106. And again, similar pattern. And it's bounced off the former resistance, and they're using that as support now. I know we're sort of both staring into me.
I love looking at charts. I wish I was better at it.
Oh, well, so do I. But once again, I think the point I was making on this one as well is it's respected that moving average again. And I think when we're in these sort of doldrum times, those bigger, longer term indicators are something that you should respect while we're moving into these strange Christmas markets.
Yeah, it's a funny old time, isn't it? and you never really know what's going to come out of left field, as we learned from the Bank of Japan this week.
Yeah.
But when you think about the euro going into next year, because if we are going to continue to see this rollover of the US dollar, the euro has to play a part in that.
It does, yeah.
So what are you expecting?
So I'm actually thinking, I'm trying to take a bit of a step back end of the year.
Yeah.
I'm thinking a lot of people are talking recession, and I think we're going to start hearing the term safe haven again coming in, and I think that's going to lead to dollar topside. Now, you might see dollar topside even though the US is struggling. So I can't see, I think the euro is going to have a little bit of a harder winter as we come out. We've still got obviously a lot of trouble in the Ukraine. We're going to need data to really help us. So I think the first few data points that we see in the new year, so looking at January and February, we really want to see what we're going to get from the Fed and anything fresh from the ECB. So I think we're at a fairly good level here in the euro. It was only a few months ago we were talking about the euro down in the 80s, and you know, I was one of the ones that was going, yeah, look at this momentum, it's going, and then bang, we got a nice snapback, and that's been helped by the Fed and US data. So I think the first few data, the big data points, are the non-farms and what we hear from the Fed and what we hear from the ECB, they're going to give us a fresh driver. But one of the nice things from the BOJ, and I think other central banks for this year, is that we are getting trends back in currencies. We are seeing interest rate differentials really kick in. And I'm hoping for some fresh impetus, and we can then you'll probably be able to make a call on the euro within the first 6 weeks of 2023. And that'll give us your fresh trend for the first 2 quarters of 2023 and give us some good trading opportunities.
Okay, and when it comes to the Aussie, what would be most influential? I mean, I know, you know, the direction of the US dollar, but we've got China reopening, we've got a little bit of positivity, you know, around the edges there.
I think that's really going to help the Aussie. I think certainly looking at 2023, one of my main focuses is looking at what's going on in China. And if we are seeing positive moves out of China, looking to get long of the Aussie, probably on the crosses more so than against the dollar. Obviously play that dollar trade as well. What we get, and we might get that perfect storm that if China comes good and then if the US doesn't look so great and we start to see a Fed really pulling back, then the Aussie could really motor to the top side. I think there's a really good opportunity for the Aussie top side on the crosses against Euro, Sterling, and probably Yen. Sorry, not necessarily Yen, sorry. Mainly Sterling and Euro, but look at that Aussie Kiwi chart as well. I think that's another one.
Okay, well, we'll do that today. We'll do it when we get off right now. Nick Twidale, FP Markets, thank you so much for joining us. And Merry Christmas.
Merry Christmas
to you. Have a good one.
As well.
All the best. We'll see you in 2023.
Thank you.